All right, so latest note, you kept your price target for the S&P at 6,600. That's kind of directional. That's kind of where you see the market going. These Nvidia earnings, do they have the potential to change how you see the market for the rest of the year?
Frank, I think these Nvidia earnings are going to be absolutely huge for investors today. And the reason being is that it really puts into question the growth trade in this market. If you look back over the last couple of years, it's been the Mag 7 stocks, it's been Nvidia that has been driving the growth trade in this market. And if you look at over the last 2 weeks, the sell-off we've seen in momentum, the sell-off we've seen in growth, I think is just some sort of positioning and squaring ahead of these Nvidia earnings that are going to be coming out later today. And if these results are not absolutely pristine and the guidance is fantastic and they talk about a very large pipeline ahead, I think there could be some disappointment and this growth trade could continue to wane in here at this point in time. So that's the challenge, Frank, and the setup in this market. And the question is, what do you do? Do you rotate or do you sit here and you wait for these larger cap names to continue to play out? From our perspective, below the surface, there's a lot of other stocks that are working that seem to have a better setup.
Yeah, speaking of, you were adding some new names to your tactical portfolio. One name I actually want to talk to you about is eBay. Reports later this week. The retail sector under quite a bit of pressure. We were looking at yesterday, the XRT retail ETF actually 10% below its 52-week high. A lot of questions about the strength of the consumer and also the impact of inflation. What made you want to add a retail stock in this current environment? It seems like the retail trade's a bit shaky as well.
Yeah, there's concerns about retail, but when I sort of step back and I just analyze the trends in this market and you come back and you look at the results you've seen from Walmart, you've seen from other companies, and you look at the trends, a lot of those retailers seem to be in pretty good shape just looking at these trends. And eBay specifically has got a very nice setup on the charts. And I don't think there's a huge problem going on with the consumer at this point in time. There is some softness, no question about that happening. But again, the longer term setup, again, people still seem to be spending. The economy still seems to be in decent shape. And that's what a lot of these charts are telling me at this point in time. I think the crux of the issue for this market, though, is there's been so much momentum. There's been such a large growth trade in here that it sort of blurs the line between problems with the consumer or just problems with growth stocks. And right now, I think that is the question that we're going to get answered tonight after the close.
Yeah, by the way, Craig, great note out. Wide range. You hit on a number of things. Also some historical precedents when it comes to the markets, if you don't mind us going back to the broader market. According to your research, in the third year of a bull market, we had 20% back-to-back returns the last 2 years. The return's actually about 5.2% on average. But this is a bit of a different situation. We have tariffs. We have a trade war. We just have a lot of different kind of disruptions in this market. Do you still see the potential for that 5% rise happening this year, again, after these 20% back-to-back years?
Frank, just going back and looking at history, the answer is yes. I mean, post-World War II, the third year of every bull market, you've had about an average return of about 5.2%. And if we look at what's happening in the rotations below the surface right now, it all sets up and sort of squares up with this being an okay year, not a great year here for 2025. And that's why I continue to think that the S&P is going to do well. The composition of this market is going to be very different. In fact, if you look at the 50 best performing stocks, only one of them is a Mag 7 stock, which is Meta. And they've driven about 42 basis points of the performance for the S&P 500 this year. But below that, the average of the top 50 stocks has had a return of about 20%, but the market cap has been 86 billion. So much smaller, much different setup than what people have thought. Frank, if I would have said to you that Philip Morris or CVS would have been among the best performing stocks here in 2025, you would have probably said, I don't think that's the case.
All right, Craig, we got to get going. I need a quick answer on this. According to your research, in this third year of the bull market, small caps actually outperform as you go to the back end of the year. We were talking about small caps on the show earlier this week. Do you still see that same setup when it comes to the Russell?
I do. It's been a little bit of a rocky trade here at the start of the year, but I still think that the Russell 2000 is going to outperform the S&P 500 this year. And again, it's a bold call, but I do think it is going to play out.